Good morning, students. So, we are going to start with the next method under assessment of AOP. We have studied that AOP can pay tax either at rates applicable to individual or at MMR, that is maximum marginal rate. Maximum marginal rate means the rate which is the last rate or the highest rate in the slabs. So we know that under the slabs, 30% is the highest rate. So 30% is the MMR plus cess of 4% upon it. So 30.12% is the rate of MMR. Maximum marginal rate, maximum rate which is being charged on income is called as maximum marginal rate. So AOP shall pay tax at MMR when the share of members is not known to us and when one of the member is having income more than exempted limit. In that case, AOP's total income will be taxable at MMR. And for the calculation of tax liability of AOP, long-term capital gain is taxable at 20%, short-term capital gain on shares subject to a security transaction tax is taxable at 15%, casual income at 30%, and balance income also at 30% when MMR is applicable, right? Now there are cases when AOP can pay tax at a rate even higher than MMR. That will be possible only when there is one or two members of AOP and they are paying tax at a rate higher than MMR. For example, a foreign company is supposed to pay tax at the rate of 42%, right? So, if a foreign company is member of AOP, in that case, AOP's tax liability will be determined little different. So, a rate which is higher than MMR is applicable on AOP's income in case when one or more of the members are being taxed at a rate higher than MMR, right? So we clarify this with AOP's total income is 50 lakhs and there are three members and one of the member is a foreign company and other two are individual. Their ratio is given to us 2 is to 2 is to 1. Rate of tax applicable to a foreign company is 42% plus 4% cess, so 43.68. One of the member is paying tax at higher than MMR, that is 30%. So we divide the AOP's total income into two parts. One part will be the share of foreign company. So foreign company is having 2 by 5 share in 50 lakhs. So 20 lakh amount will be attributed to foreign company and balance income 30 lakh is to be distributed between other two members of AOP. So when we are supposed to calculate AOP's total tax liability, we will use these figures 20 lakh and 30 lakh. So 20 lakh की income पे the rate which is applicable to foreign company is charged. That means 20 lakh will be taxed at 43.68%. So the tax liability would be 8,73,600 and the balance income 30 lakhs will be taxable at MMR, right? So 30.12 tax liability होगी 903600. तो इन दोनों को प्लस करके प्लस सेस ऐड करके नाउ surcharge is also applicable on AOP. Surcharge is applicable when the AOP's total income exceeds 50 lakhs, but if it is up to 1 crore, the rate of surcharge is 10%. So in this case, since AOP's income is 50 lakhs, so there will be no surcharge. If it exceeds 50 lakhs, then surcharge at the rate of 10% or 15% would be applicable. And surcharge is calculated after cess. The total of 1,18,48,288 पे surcharge applicable होता, right? And the rate of surcharge is 15% if the total income exceeds 1 crore, right? So this is the second case. There is no as such question for this particular method. Only one point is given in one question. I'll be discussing that question. Other than this, there is a topic called alternate minimum tax, AMT. It is exactly similar as we have done in the chapter of assessment of individual. There is one illustration for this. You can refer to that illustration. I'm not going to explain it again. So, for the understanding of this method, there is one question, back question 4, and illustration 4 as well. So, I have solved fourth question for you, and you can go through the illustration. In this case, AOPs, there are two cases in this question. Case A, AOP's total income is divided into two parts, agricultural income and non-agricultural income, 90 and 2,63,000. And there are two members, Ram and Rahim. There also agricultural income and non-agricultural income is given to you. Profit sharing ratio is 2 is to 1. Now we have to check whether AOP will pay tax at MMR or at individual rates, right? So we will check the total income of Mr. Ram and Rahim, and for total income we will consider only non-agricultural income because agricultural income is being exempted, right? So this is 1,67,000 and this is 1,92,000. That means both the members are having income below the exempted limit. So in case all the members are having income below exempted limit, so AOP will pay tax at the rates applicable to an individual, right? Since agricultural and non-agricultural income both are given, an integration condition said that integration is also done in case of association of persons, right? And when the agricultural income exceeds 50,000 and non-agricultural income exceeds exempted limit. So all the conditions are being fulfilled. So integration of AOP's income will be done, right? So first step in integration income is we add agricultural income and non-agricultural income. The total income comes out to be 3,53,000. So we will calculate tax on this total at second step. So first 2,50,000 would be nil. 3,53,000 minus 2,50,000 करके next जो balance बचा 1,03,000 पे 5% के हिसाब से 5,150 की आपकी tax liability आ गई, right? Now in third step we will add exempted limit and agricultural income, and this total comes out to 3,40,000. We have to calculate tax on 3,40,000. So first 250 nil, next 90,000 pay 5%. So 4,500 is the total tax payable on 3,40,000, right? Next step, we have to calculate the difference between these two tax amounts. So always we use higher minus lower. So 5,150 minus 4,500, it comes out to be 650. There is no rebate which is applicable to AOP, neither 87A nor under 86. So we will add just cess. So AOP's total liability is 676 and AOP will pay 680 to the government, right? Now AOP has charged tax at individual rates, so the share of AOP will be added to members' individual income, right? So we will calculate firstly Ram's total income. Ram has his own agricultural income of 36,000 and non-agricultural income of 1,67,000. So share of AOP, both from agricultural income and non-agricultural income will be added to Ram's total income, right? So Ram's share is 2 by 3. So agricultural income 60,000 and non-agricultural income 1,75,330 will be added. So we will take the total of these two values. अब since individual है, agricultural income 5,000 से exceed कर रही है, non agricultural income exempted limit से exceed कर रही है, so we will add up, we will integrate. And Mr. Ram is contributing to ULIP plan rupees 7,500. So non agricultural income में से 7,500 की deduction मिल जाएगी. So non agricultural income will be 3,34,833. Sorry, 830. Now we will start with the integration process. So again, agricultural income plus non-agricultural income, tax on this total income. Then we will add exempted limit plus agricultural income and tax on this total. The difference between these two is 4241.5. Now, since this person's agricultural income is less than 3.5 lakhs, so he is entitled to rebate under Section 87A. Rebate under Section 87A, the amount is 2500 or tax liability, tax payable, whichever is less. So 2500 will be the rebate under 87A, and after deducting this, we are left over with 1741 amount. We will add cess first and then rebate under Section 86 will be applicable. So after adding cess, tax amount comes out to be 1811.16, right? So rebate of tax is applicable on the basis of average rate. So we are paying this much tax on this much value of total income. We will not consider total of agricultural non-agricultural, because agricultural income is exempted. We are not paying any tax on agricultural income. We are just paying tax on 3,34,830. So total tax payable divided by total income into share of AOP. This gives us the figure of rebate under Section 86. So after deducting this amount, the leftover amount is 8,62.75. So Mr. Ram's tax liability would be 860, right? On the similar pattern, we will calculate Mr. Rahim's tax liability. Agricultural income, his own income and share of AOP will be added. Non-agricultural income plus non-agricultural income, the share of from AOP added. And this person has contributed to PPF and he has paid mediclaim insurance premium. So he is entitled to deduction of 3600 under 80D. So after deducting these deductions, the total income is 2,68,570. Again, all the conditions of integration are being fulfilled. So we will start with the integration process. Agricultural plus non-agricultural income will be added. Tax will be calculated on this total. Exempted limit plus agricultural income will be added and tax will be calculated on this difference. So we will these two tax rates, right? So after this difference, we left with the figure of 928.5. As you've seen that the taxable income of this person is 2,68,570. So he is also entitled to rebate under Section 87A. So the amount is 2,500 or whichever is less. So whole amount of tax will be considered as rebate under 87A. So his tax liability would be nil. When tax liability is nil, rebate under Section 86 is not applicable, right? So this way we calculate the tax liability of AOP, Mr. Ram, Mr. Rahim in case A. So second part of the question is case B, where AOP's income remains the same and there is change in Ram and Rahim's income. So Ram's agricultural income is 36 and non-agricultural income is 87,000. Rahim's agricultural income is 42 and non-agricultural income is 10,000. Now the Rahim's total income, non-agricultural income, is more than exempted limit. So AOP will pay tax at MMR, right? Maximum marginal rate. So AOP's tax liability will be calculated. 2,63,000 is the total income of AOP. 30% of this and cess at the rate of 4%. In this case, integration will not be done. Agricultural income will be exempted. Integration will not be done because AOP is going to pay tax at MMR. When AOP is paying a tax higher than individual rates, then integration is not being done, right? And since AOP is paying tax at MMR, so share from AOP will not be added to members' individual income, right? And since share is not being added, so members are also not entitled to rebate under Section 86, right? So that's all with this chapter. Now you can practice the questions. There are hardly, I think, 5 to 6 questions, back questions, and 5 to 6 illustrations only. So you can ask for your queries if any. So good day, stay home, stay safe.